Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Thanks so much for joining me today. We got a lot to talk about today. Earnings on tap today. Elon Musk and another historic tweet. Should he sell his stock? Should he keep his stock? We'll take a look at that tweet. We're going to take a look at a Metaverse stock today and whether or not it's a buy after earnings today and whether or not it's got too much competition now from Facebook. We're going to take a look at the percentage that they're expected to beat by, which is still supposed to be a loss, but it's supposed to be a pretty big percentage. So remember, everything we talk about with the earnings and whether or not those stocks are attractive buying opportunities after earnings is the percentage growth that's expected and then what the actual number is on that growth rate compared to what was expected. Before I forget, we actually released 2 new videos this weekend, and I just want to make sure I point them out to you. I think that the one that you might want to pay attention to today, if you click the link below the video or if you're watching it at the end of the video, you'll see something now below in the description about the stock trading course that I posted here on YouTube over the weekend. So make sure you click through it and watch that. It's a pretty good one. It's roughly 30 minutes. I think you're going to enjoy it. So we got a ton of stuff to talk about today, so stick around. I'll be back in just 1 second. Okay, so one of the most important things I want to say today, obviously, thank you so much for joining me. I'm really grateful that you're here with me today. I have a really big announcement today, which is kind of cool, and it has to do with coffee. Not paid, but we're starting out. We're trying a new coffee maker this weekend. I don't know if anybody's ever used this kind. It's called a Chemex coffee filter. It's actually pretty cool. So far, so good. So far, no bitterness. I'm very, very excited, but I'm cutting myself down to 1 cup, trying to get in shape, trying to set resolutions before the new year hits. Hopefully, everybody's doing the same thing. I just want to say hello to Cynthia. Cynthia is a new member of our boot camp. Cynthia, thank you so much for joining us. I will be watching you to participate. You'll find that the longer you're in the boot camp with us, I seek out the people that have joined and aren't asking questions. So I'm going to go at you to ask. I know last night you promised you were going to ask questions. So I'm going to make sure I'm going to keep you to that because I want you to get every moment of value out of your experience with us in the boot camp. Simon, good morning. How are you, pal? All right. So we're going to start out talking about, obviously, we're going to hover into our sector rotation. That's a big part of what we start out every week. We're going to actually do a little bit of a deeper dive into which of these stocks are actually in play right now. So we're going to start out with the top 3. And as we've been mentioning, the industrials have been working their way up the list. So that's going to be an interesting list of stocks that we're going to keep an eye on. We're going to filter it down to what I think are the top stocks to be buying right now in that group. Some of them are already breaking out. Some of them are still in downtrends, just looking for that move to the upside, looking at to become a new order flow. Remember, one of the biggest things we talk about and spend quite a bit of time on is it's our job to track and follow the smart money. And one of the parts of tracking that smart money, probably the easiest way to do that, the easiest way to find stocks to buy is sector rotation. I think one of the biggest challenges that we see a lot of people have when they come into our community is they're overwhelmed and there's simply too much to focus on. So one of the biggest suggestions I can give you literally right now is start to work down to which stocks you want to trade. Is it going to be a sector? Is it going to be a couple of different industry groups? Or is it just going to be a group of stocks that have nothing to do with each other, but they have a lot of liquidity, a lot of volatility that matches your personal risk tolerance, and they're pretty much in play when the market's obvious. So 3 different ways to set up your lists, or you could just run scans, which I think is a little bit more difficult. I think it's easier to trade the same stocks on a regular basis, a little bit of an advanced professional trader tip there. So we're going to head right over into ROBLOX Stock. Let's get the coffee maker off the screen. And basically what we're going to look at, let me just make this a little bit bigger here. This is what we're talking about right now. The percentage of growth, revenue growth is the big thing we're going to be keeping an eye on. Obviously, it's a metaverse stock, and buying metaverse stocks are really a big deal right now. So the question at this particular moment right now is the competition from Facebook going to be too much for them to overcome? I don't think so, actually. I think I have a pretty strong opinion on this right now, where I know that Facebook has all the money in the world right now. I know that they have a very strong war chest, for lack of a better way of putting it. But there's something to be said when you have first mover advantage. So one of 2 things is going to happen. They're going to get bought out, or they have that first mover advantage where they're already in the industry and Facebook is kind of getting into something else that it hasn't been in before. I think Roblox is going to be okay. And that's actually the way I'm going to be looking at it heading into this quarter. I think very similar to something we're going to talk about today, which is the infrastructure bill and what stocks specifically that we can speak about today to be buying from the infrastructure bill. I think that this is going to be fine. I think after earnings today, I think earnings are going to come out. I think the earnings are going to be good compared to what was expected. But more importantly, kind of tying this back to the infrastructure bill, is there's massive attention on this right now. The same way that the electric vehicle stocks have massive attention, the same thing that Bitcoins and Bitcoin stocks have massive attention right now. Remember, it's our job to follow the order flow. And the order flow is when smart money has attention on either individual stocks, individual ideas, individual groups. In this case, we're talking about the idea of the metaverse. So I think very similar to what we've seen in a lot of Bitcoin related stocks, and specifically the ones that we watch in our community, Bitcoin mining stocks. I think metaverse stocks are going to be very, very well received over the next 6 months to a year. This is the way I'm looking at it right now. And remember, if you're a regular viewer of the channel, everything that we do is if this happens, then we do this. If this happens, then we do this. If Roblox comes out and beats the expected growth rate of earnings next quarter, next 2 quarters, I'm going to be looking to build a position and hold that. If they do not, again, I'm not trading into earnings. I want to make it clear. I'm building an argument for why I want to be a buyer. If that argument unfolds in a positive way, based on the way I built that argument, then you trade with conviction. If the earnings growth rate is less than what they're saying, 163%, remember that expectation and the growth rate is what we're looking at. If it's less, I'll just leave it alone and I'll slide into something else that has earnings that I could trade over the next quarter. And I can't stress this enough. This is by far the easiest and simplest way to trade earnings. We get so many people looking to trade earnings prior to the earnings, looking for a home run, trading options, trading stocks, and just guessing. Stop guessing. There's no reason to guess. And a big part of what we do, a big part of following the order flow, is we simply want to piggyback those with deep pockets and look for a spot to hop on board. It's by far the easiest way to trade. It's what we do. Order flow and tape reading are probably the 2 simplest ways to understand how to read the tape and how to set expectations for the ideas that you have. And trade expectation is what are the odds of my profit target being hit versus my stop loss. So we're actually taking that a step before that when we're talking about Roblox. We're talking about, we know the expectation. If it comes out, only then do we set our position sizing parameters and how we plan to get into that trade. If it doesn't, that's fine. We just leave it alone and we go to look for another idea. And what's kind of interesting is we've actually had this conversation in our boot camp. And there's another question tonight. We have our weekly coaching call tonight about this very topic, which how do you take a bigger list of stocks and make it into your top A+ trades? And it really comes down to, if this happens, then I plan on doing this, because all the stocks that meet that scan don't necessarily make trade ideas. So that's what I'm looking for in RBLX ROBLOX stock today after the market closes. It's the expectation of the growth rate. That's the big thing I'm going to keep an eye on after the market today. Next, we're obviously going to work our way over into this super interesting tweet storm over the weekend. He's talking about it from an altruistic perspective of why he's doing it. But either way, Elon Musk has set the bar. I don't know if you happen to be a comic book fan like I am. Way back in the day, they had DC Comics took a poll on whether or not one of the new Robins should be exterminated, for lack of a better way of putting it. And there was actually a call-in vote. Well, Elon Musk is kind of doing the same thing. Unrealized gains, tax avoidance, proposing selling 10%. As of right now, almost 58% of the people who have voted, which is now 3.5 million votes, have voted for Elon Musk to sell some of 10% of his stake in Tesla. I think that this guy, let's just say it what it is. The guy's a genius. He's a visionary. I don't own a Tesla car, but I will tell you, he's a genius. He's a visionary. This is marketing at the highest levels. This is the kind of stuff that Steve Jobs would do. Maybe he'd do it in a little bit more polarizing way. He's keeping himself in the news literally every single day. You can't pay for this kind of marketing, whether or not you agree with it or not. There's some, if you read through the post here, if you don't happen to have it, I'll post this into the chat just so you can take a look at it. Super interesting, super fascinating. And obviously Tesla shares are taking a hit this morning because of it. It was down a little bit more earlier. It's down 4%, just over 4% right now, down $52. Look, is that the reason it's going down right now? I don't know. Is it fascinating? Yeah. Is it going to affect my decision to be a trader or buyer of Tesla stock? Absolutely not. I love the stock. We actually about 3 weeks ago had a video that we did. I think when it was just below like 725, we were calling for 1,000, hit 1,000, blew through it. I didn't think it was going to get up to 1,200. I still love it. Do I think the stock needs to pause a little bit right now? I do. I think the stock needs to take a little bit of a break. I think that's just natural. Again, we talked about it last week. Let's use John A. and Jason as an example. Let's say John A. has a hedge fund. He calls up Jason. Jason starts working the orders. And let's just say John calls up Jason and said, we need to start building a bigger position in Tesla. They do it during that consolidation. It kept going, pushing and pausing, pushing and pausing. And now that volume has expanded, and that's the smart money exiting this particular move on the way up. Now we need to see that they're going to take a little bit of a break. It's going to pause a little bit. And you can see here, I'm not even like forecasting. It's just what the stock has done. When it goes up, it goes sideways. When it goes up, it goes sideways. When it goes up, this one went sideways for about 3 weeks, sideways for about 3 weeks. We haven't gone sideways for that amount of time for a while. If we take this even a little bit further and just use a simple Fibonacci retracement level, and I usually like the 50% level, we're talking all the way down here, right around 1,040 would be the level where I'd probably start getting a little bit more comfortable looking for a pullback. So if you think about what we're talking about here, we are kind of projecting out if Tesla pulls back a certain amount, which again, I don't want to see the stock go down. We're talking about setting up a new trade in Tesla based on the risk and what is the potential reward. So we're looking for what are the odds of it following through and how much risk do we need to take on that trade. So in that instance, we're looking just down around the 1,040, 1,050 level. If that happens to pull back, that would be kind of the area where I'd be looking right now. Even if, and here's the thing, we spend a lot of time about talking about a push and a pause, and we talk about the language of holding the bid. If Tesla goes up and continues to hold the bid and goes sideways on lighter volume, then we're looking at another higher move because we're not seeing distribution. If we see a higher move like we've had and we start to go, we start to pause on heavier volume, the odds are better that we're going to see that pullback back to that area. So it's going to be interesting. So remember, this is trading at the highest levels. What we're doing right now, and I think a lot of new members, especially in the boot camp, are really starting to understand trading becomes infinitely simpler when you script out what you plan to have happen. Raise your hand if you've chased a stock too much. It's up. I read it in the news. It's in a scanner. I have to buy it. You don't pay attention and put that scenario together. You buy up here because you didn't read the tape, and you put it on. It pulls back because you didn't read the tape. You get stopped out. The stock bottoms out and then does exactly what you thought. That's what separates somebody from chart reading to learning how to be a trader. A trader puts those pieces together because it's so much more than whether or not the stock is strong. Remember, we keep talking about every week, pick a side, then pick a spot. Picking a side is reading the order flow. Picking a spot is reading the tape. And reading the tape means you're setting up a good, justifiable reward potential, that there's a really good chance the reward you're expecting is there, which justifies taking the risk. And then you can take it a step further, understanding position sizing. All right. I want to remind you that the video that we put out this weekend, it's a free stock trading course. The link is in the description. Make sure you click down there and watch it. It's a pretty good one. Okay. So we're going to work our way now over into sector rotation, and we're going to get into the top three list here. We're going to go over consumer cyclical. I want to make sure I give you some ideas, technology stocks, and then obviously some industrial stocks, which we've been talking about now for the better part of about a week and a half, actually. So you know what? One thing I want to make sure, I'm going to post this in here as well. You know what? I'm actually going to tackle that first. I want to put this in here there so you can keep an eye on this. This is actually pretty important. But the big one that I want to talk about, we're going to work our way all the way down here. And if you've been a regular viewer of the channel, the one all the way down here is the one that I want to talk about right now, actually. The electric vehicle stocks. It's actually really exciting right now that we're seeing a lot of American companies right now compete with the Chinese electric vehicle companies. Obviously, Tesla is the OG right now. He's got such a big competitive advantage. But we're starting to see Ford explode. We're starting to see General Motors explode. Very exciting. Last week, if you didn't happen to catch it, Lucid Motors, which we're actually still looking at trading that right now, exploded again. So now we're going to, and they're a little bit more high end. That's what they call the luxury EV miracle. But the ones we want to talk about are the charging stations that are going to be juicing up all of these cars, right? So the top ones that we've been watching, again, if you've been with us for a while, and I hope you are, please do me a favor, smash that like button, hit the subscribe. ChargePoint, CHPT. So again, making a list of what could be in play based on the infrastructure bill. ChargePoint is exploding. You can see the level we had 26 as a level. Now it's all the way up through 28. So I want to give you a list of stocks to buy, at least keep an eye on. And now we learn to read the tape, right? So ChargePoint, the big one, BLNK, also up 10% at this point. And the last one, which we actually did mention last week, EVGO. Now, what's kind of interesting about EVGO here is, remember how we're talking about reading the tape, reading the order flow, and putting yourself in the mind of, let's say John is the hedge fund and Jason is managing his trades. We want to build our positions in the same context that the smart money is building their position. So if they're just starting their position, which if you look at here in EVGO, we had this big move to the downside. And remember, we need to track if and when that breaks. So that's the break of the downtrend. We now know that we need to start to draw our lines, our lines in the sand that we determine whether or not this downtrend will continue or where we validate a new move in the opposite direction. So let's actually bring this one up. Yamit, VOLTA is another one. Thank you so much. Really appreciate that. So anyway, it broke the downtrend here, but now this has been the right price for a while. So you take it a step further and you start to read the tape a little bit deeper and whether or not we saw a increase in volume. Now, what's kind of cool about this is look at this increase in volume prior to the breakout. So we know that this level right here was the level that we were monitoring in EVGO. But prior to the breakout, when it starts to hit the headlines, you need to be reading the tape every day on top of reading the price action. Remember, chart reading is not trading. Taking it a step further, talking about price action, talking about volume, talking about position sizing, talking about risk, talking about potential profit targets, and then maximizing those profits. That second part is trading. Finding just the break of the trend, that's only chart reading. You want to be here with us? We're taking it a step further. But what's kind of cool is you see the volume expansion. You see the level where now we confirm a new trend. But what's super cool here is after all of that, the stock paused for a week, giving us a chance to look to put a new position on. Now, I generally don't trade stocks that are less than $10. I kind of stay above that. I don't trade penny stocks. I kind of trade the market leaders. But what's exciting about this for us here as a community is we can see how this unfolded. Now you have a structure. You have an idea of, okay, the smart money's starting to build their position. It's a $9 stock. It's very tempting to get in. I can trade 5,000 shares of this stock because it's only $9, but be smart. The smart money's starting to build that position. So you should start building that position. We now have our first push and our first pause. John's hedge fund lit up. Jason started buying. And now it pushed up and now it paused. They took a break for 5 days. Now the news came out, starting to spike a little bit. So now we look for the next pause to put on the next piece. This is smart. We're actually working our trades the same way that the smart money is. This is what it means to be stacking the order flow. This is what it means to be reading the tape. One of the biggest problems by a mile, nothing even close, is trading too big, getting shaken out of a good position. You get you have too many share size before you get feedback from the market, shakes you out of the position, pulls back, and takes off without you. Be smart. Learn from trading history. Learn from all of the great traders in history. When you buy stock, work your way into it. What I'm giving you right now is a visual representation of the perfect scenario of understanding the smart money is just starting to buy this stock right now. So we go in with our initial position, and then we look to build this position at the same time in the same way that they do. And what's super cool about this is there's price action that we follow on the way up. We call that the markup. We'll be able to spot if there's distribution, if there's continuation patterns, and then that's the way that we trail them all the way up with that. Now, what's kind of cool about this is we talked about and had good questions last week about this stock, Tilray. We are not seeing signs of accumulation yet. Right now, the stock is still pretty much, you can see here, here's the line in the sand that we drew. So we need to start, before we start to dip our toes in here, we need to start to see a big increase in volume, at the very least, Believe it or not, best case scenario is if it starts to go sideways on heavier volume, they're quietly buying as it's going down. Then eventually it gets to a point where they're selling and smart money saying, I'll buy him, I'll buy him, I'll buy him. When does that smart money have to start paying higher prices? When that selling dries up. And if John calls Jason on their hedge fund, be like, all right, the selling dried up, but we want 5 million more shares. Now they have to start paying higher prices. That's when you see the push. You'll see well bid on the daily chart. And if you remember what we talked about, well bid means, it means higher highs, higher lows, closing on the highs, best case scenario with increased volume. So right now, the way that we just looked at it, the way we just broke that down, Tilray is not showing signs of accumulation yet. I know everybody can't wait for the cannabis sector to light up, no pun intended. Can't wait for the cannabis sector to be in play again. Right now, as of this moment, we're not seeing stocks being purchased by the smart money. It's still just a downtrend, most likely going to hover right around that $10. But here's the exciting thing, and this is what elevates you past chart reader, and you are ultimately become somebody who has absolute confidence in what you're looking at because you're scripting it out. If this happens, then I'm doing this. If this happens, then I'm doing this. You're no longer reacting to headlines. You're no longer reacting to price scans. You already have it scripted out what you plan to do. Now, again, I'm only giving you a little taste of this because we do this in 50 times more detail in the bootcamp. If you want to learn about that, click below in the video. But this is a super cool example compared to what we just looked at in EVgo, because EVgo gave us the signals and a push and a pause. And now the headlines came out, which is what we've been talking about here in the industrial stocks. If you're a regular viewer of this broadcast, I'm sorry, let me get another cup of coffee. We've been talking about the industrial stocks moving up the list. And let me show you the list in a little bit more detail where the industrial, we track this every day, by the way, if you happen to be a new viewer of our channel here, we track this every day. It's the first thing that I give to the boot camp at the end of every day. I want everybody in the community to understand that this is where smart money is flowing right now over the day, the week, the month, and then drill down into better opportunities. We've noticed that the industrial stocks went from 11 to 8 to 6 to 4. Now they're all the way up at 3. So now what we're going to do is we're going to take a look and find some industrial stocks that will be in play that we can keep an eye on this week. Some of them are breaking out right now. Some of them are just starting to move to the upside. So in that list, let's not forget about this stock. This stock was amazing last week and still in play. There's no reason for this stock to be off of your list. Make sure it's in your list, okay? Car is one. Now, we've had a lot of conversations last week in our community about recovery stocks. So what's in the recovery stocks? Start putting into your mind right now, okay, if the market, the economy, everything starts getting a little better, we're talking about airlines, we're talking about cruise lines, and everybody online who facilitates that kind of stuff. So now we're talking about UAL, DAL. See how we're starting to put this pattern together here? We're going to work our way over into General Electric. Again, we're sticking with the industrial stocks, okay? Now, GE finally got past this 107 level. We're looking for it to go well bid. I want to talk about, wait, there's a good question here that I want to answer, okay? It's already up 16% pre-market, okay? This is an excellent, excellent question, stock option. Thank you so much for asking that. Now, Pam Hicks, who's actually on the call right now as well, we had a really super deep dive on this last week in our Wednesday night coaching call. We have 2 coaching calls a week in the boot camp, just so everybody understands that as well. And Pam actually asked the question, if I have my buy set for here and the stock's in my list and we gap all the way up here, remember, every stock has an average true move of what it normally does. So this is what justifies the trade. Let's just say this is $10 just to keep the numbers simple. And you go into the day wanting to buy that stock. And now the stock opens up here where maybe 60 to 70% of what the average true move is for that stock is already taken up. Now, average true move is different from average true range. I want to be clear. Average true range is based on the daily chart and what from the low to the high. The average true move is, let's say you look to the left or over here, and you take a bullish move in that stock. You look to the left and you say, when this stock normally moves from one push to the next pause, what is the normal move? What is the normal move of what that stock does? And that's the easiest, simplest, most least complicated way of saying, okay, if it normally moves $10, and again, I'm answering this question here because it's super important, and Pam brought this up last week. How do you play it? Now you have to determine, remember, stock option, the difference between a chart reader and a trader. A trader sets the next expectation. Oh, the doorbell ring. That means we have 5 minutes left. I have to head over to the other one. So now that means we have to adjust our expectation for follow through. That means a 16% gap could still follow through, but what is the right risk for the potential reward on a 16% gap? So that means that if we're still looking to put that trade on, the reward potential needs to be adjusted based on what it normally does. Now, we don't want to put limitations. It can obviously keep going, but we're talking about this moment in time when we're looking to put on the initial piece of that trade. So if it's up 16%, but we like the longer term move, we are most likely going to have an initial piece would be lower than what we fully want to put on. The stock will then move up to what it normally does, pause, and then we put on the next piece. So what I'm laying out for you from, and this is really advanced high level stuff, because it's already gone most of what it normally does on the weekly chart, the lower initial position size allows the stock to fluctuate because of the giant move. We'll end up pausing into what it normally does, maybe a little bit further because the catalyst is really good. Then on that next pause, we get up to our full position size without getting shaken out. That is such a ninja thing, but it's advanced that you need to know so that, again, raise your hand. How many times have you had a great idea, you got shaken out because you had too many shares at the wrong time? What we're talking about now here is working your shares in the context of increased volatility, which how fast and how far it went, to hold the trade with the right initial share size so that then you could build into the trade on the next pause. That's a lot, right? I mean, I'm obviously giving you the tip of the iceberg here. We cover all of this in infinite detail inside the boot camp because I'm actually giving you my entries, my exits, and all that kind of stuff. So great question, stock option. I'm sure a lot of people, I want to make sure I get into some more ideas for everybody on the industrials and work our way through some more of those ideas. So stock option, I hope, and for everybody, Pam asked that question last week as well. So I hope everybody understands that. Big gaps like that, adjust your position size, and then put the next piece on during the next pause because you can expect some volatility on the gap. Okay. All right. So we want to go into the next one. So GE was another one that we're looking at. We're still looking at, to give everybody context here, we're going with the industrials and going to work our way up the list here. So GE is in that criteria. Honeywell has now started over the last few weeks, and you can see here very clearly we broke this bullish move, got over 224. Next level, probably up in this area. So now what's kind of cool about this is you can actually determine what's most likely going to be the profit target here. So we're looking up around 233. So we have roughly $8. So what's kind of cool about that, and again, I'm getting all excited because now we're talking about trade management, which is very different than just calling out chart patterns. If we know there's $8 in Honeywell to the next significant reference point, that should automatically help us figure out what kind of risk and position sizing we should be taking just based on the fact 1, 2, 3, 4, 5, 7 times Honeywell got shot down at 233. So that has to be your initial target. That doesn't mean that's all it can go to, but that's the initial place that it stopped the last couple of times. So again, thinking it through, industrial strong, Honeywell rallying in the last couple of weeks, big resistance at 233. You have a choice now. You trade up to 233 as a swing trade, which is an $8 move, or you start building a position now and you don't add until it gets over 233 because that's where sellers keep shoving it back down. Now, the infrastructure bill and the possibility of the right sector group pushing that higher could see it punch through finally through 233 because now it has a different catalyst. You see how we're building the argument? This is really what tape reading is about, stacking the order flow. But the second part is, and I want to buy it for this reason, and this reason, and this reason, and this reason. And if it gets through there and I see this unfold and this unfold and this unfold, then I will add. Think about that. And maybe the last trade you took and say, oh, I read a headline. That means I want to buy it. That's not enough of an argument. You want this and this and this and this. That's where you separate yourself from somebody who's struggling and says trading doesn't work. For somebody who takes this seriously, acts and thinks like a professional, even if you have your full-time job and you understand that trading is so much more, profitable trading is so much more than just reading a headline or watching Kramer, which Kramer's awesome. I'm just putting it in context. You need this reason and that reason and that reason and that reason. We just mapped out 5 different scenarios for Honeywell and 2 different trades. That's what it means to be a professional trader. And again, I want to remind you, click the link below. There's a new course that we just put out. It's free. It's on YouTube. If you want to learn about the boot camp, that's also below. I cover all this stuff in a lot more detail. I strongly recommend you watch it. So Honeywell's another one. Glad we just had that. We can map that one out for you. So I want to segue over into two that are kind of on breakout levels right now. BE, really big engulfing candlestick, and you can see the levels and what we call room to go. And JCI is another one, needs to get above 76. So I want to finish up here. I actually have to go because we've got to get into our other meeting. I want to hop on technology stocks because that's a big one that a lot of people are love trading, quite honestly. There's really no other way to put it. So I want to make sure we cover a few here. Qualcomm reported last week. Qualcomm just exploded. And again, this is very similar to what we talked about. Remember how we just said when we're looking at a stock, you told about a stock that gapped up and hit that level or 16%, and we said work that position. So Qualcomm exploded on Thursday. That would be the first piece of the trade after the monster move. Traded a little bit higher on Friday, but now you can clearly see that this is a level where we can expect a pause. So if you have less initial share size on this particular trade, you can actually see it's down a little bit this morning. You can now reasonably let that stock fluctuate. You don't have your full position. The next time the stock breaks out with an energy candlestick through this level, that's when we look to put on the next piece after the pause. So Qualcomm is in my radar to day trade today. It would only be the first initial piece for a new swing trade up at this level. Okay. So Qualcomm matches that list. AMAT, again, very similar scenario. You have to ask yourself here in AMAT now, and this is kind of an advanced thing as well. Before you hit that buy button, ask yourself, and this is something to write down, ask yourself, how close am I to the optimal entry point? Now, what is the optimal entry point? The optimal entry point is the place where you can buy and have the greatest expectation for what we talked about just a minute ago, which is the average true move. So where can I buy that it hasn't absorbed most of what it normally does? So if we take a look here at AMAT, AMAT is an amazing breakout, right? Clearing all levels. But if you look just very quickly looking to the left, how many moves has AMAT had that are the same size, if not smaller than the one that it just did? So AMAT's an amazing idea today, and it meets all the criteria. Probably not a good swing trade to start today because of how far it is away from the start of what would be an average true move for that stock. So it's in my list. I'll look to day trade it today, but I won't be looking to start a new swing trade until what? Until the next pause. That's when I could manage my risk, and the trade profit has a much better likelihood of being hit. So remember, every time we place a trade, we have to answer that optimal question. What are the odds of my profit target being hit versus my stop loss? Now, remember, the profit target is not all we're trying to make, but it's what we use to justify the risk. So we covered a lot of stuff. So if you want to take a screenshot of this today, I could do that right now. These are the ideas and the list. We're starting out today in the boot camp. We're going to be focusing on consumer cyclical, technical, industrial, as well as what we just talked about, the electric vehicle charging stocks. Can't not mention the Bitcoin stuff. Bitcoin is rallying again. We're going to keep an eye on Mara, BTBT, HUT, and Riot. Mara's been on the top of our list. I think that's up at least another 6% the last time I got charts. Let's take a look. We'll finish up with Mara right now, right here. So Mara's up another 9.5%, just in front of 70. So again, push and a pause. So you can see here, a push and a pause, a push and a pause. Right at resistance. This is exactly what I'm talking about. This is actually a great example to finish today's video. Remember how we just talked about a few minutes ago, once the stock explodes and you can expect it to pause again, if you buy after that explosion, expect it to dance around a little bit before it takes off again. So during that dance, you want to have your initial piece before it takes off. It broke out here, put on that next piece, and now it's up 9.5%. That's the smart way to build into a position so you don't get shaken out. You're holding it long enough without the emotional angst of it's going up, it's going down because you have too many shares. You build into that trade, you start to get follow through, and you're having a good morning. Like I know Aldo, who's our crypto trading pro, is having a great morning this morning too. So I have to call it a meeting, everybody. We have to get ready for our boot camp meeting, which is every day at 8:30. So have an absolutely awesome week. A lot going on this week, some new big earnings. I just want to remind you, click below this video in the description is the new trading course that we published this weekend. So make sure you click in there. I'll post it on the, I don't know where it's on this side of the site at the end of the video. And we will hopefully have some follow-up questions on that. So have an awesome day, everybody. Thank you so much. I'm very grateful that you joined me here today. Every morning, 7:30 a.m. Eastern time, Monday through Friday. Have an awesome day. Be better than you unbelievably could have possibly expected today. I'll see you tomorrow. Thanks so much.